Hey guys, this is Ken McElroy, and you are listening to the Mailbox Money Show with Bronson Hill.
Welcome, friends. The Mailbox Money Show. I'm so excited to be here. My name is Bronson Hill, and I have got Mikey Taylor here, a famous guy, former professional skateboarder, and has transitioned to become a full-time real estate investor. And so I think you're going to love this episode. We talked, if you have not followed Mikey Taylor, if you don't know who he is, you need to follow his stuff. He's awesome. He has lots of great stuff to share. His Instagram is amazing, great short videos. And he's doing he's doing development deals. He's also doing self-storage. And so he's got some great asset classes he's working with a lot of similar networks. I think you're really going to enjoy this conversation. We get into kind of where things are headed, some really great insight there. So I think you're going to really enjoy this interview. All right, welcome to the Mailbox Money Show. Super excited to be here with the Mikey Taylor, the former pro skateboarder and turned real estate pro who's doing all kinds of big stuff. If you haven't checked out his social media, his Instagram, we are just talking about it. He's really making a big splash. Saw him actually at Limitless last year at Ken McElroy, my friend's event. And it was just some awesome stuff to share, always adding value, always adding lots of resources. So Mikey, super excited to meet you and to have you on the show.
Thanks for having me.
Awesome, man. And we found out we're kind of neighbors. We only live like 30, 45 minutes apart or something. So
yeah, we could have done this in person next time.
I know. Next time we'll come. You can give me some skateboard lessons too. I'm out there. So I have a funny story about that real quick. So I skateboarding when I was like you probably have these stories a lot, but when I was like, 14, 15 skateboarded and then got into skateboard again when I was like 20 or 21. And I just like, I fell so flat. I like landed flat on my back. I didn't get injured, but but I had one of those moments where I looked straight up and I was like, I could have just died right now. But I had one of those moments. So are you still a skateboarder? Do you still skateboard much? Are you like fully retired? Like I'm out? Like, how's that going?
Yeah, I'm fully retired. I've been retired now, almost 9 years, almost 10 in total. And I'll do it every once in a while when one of my kids asks to either see me skateboard or my son wants to just like go push around on it. That's basically what gets me on a board these days. So maybe, I don't know, 3 times a year.
Yeah. Yeah.
Not a lot.
Amazing. Not a lot. So it happens occasionally. And that's where it can be a little dangerous too. If you're like, I used to be this great and then you got all these moves and it's been a while since you tried it. But
yeah, that's when like Uncle Bob tries showing all the kids that he used to skate and he comes slamming down. It's dangerous, man. Your brain thinks you can do it. Your body forgets a little bit quicker.
Yeah, and just hence my story as well. So anyway, you got a really cool biography. You've done a great job really transitioning from being a pro athlete to being a real estate developer and just doing all kinds of stuff. I'd love to hear about that process for you. I mean, were you just kind of always knew you should do real estate and that's kind of what people are doing, or how did you get the bug for that and how did you make that transition?
Yeah, that's a good question. So I started off as a pro skateboarder. I didn't really care much about real estate back then. I wasn't like very obsessed with learning about money or investing. I just knew that I picked a career that had the potential of being very short-lived. And I was really worried about what life afterward was going to look like. And so I ended up having somebody come on as a financial advisor and as a mentor. And he just helped spend time with me, just kind of creating the foundation and gave me a really, digestible plan of this is what we're going to do. This is what I need you to do. And it's going to set you up. And so, it was little things like, here's your budget and all your money's going to come to one account and we're going to basically transfer over what you're going to live off of. So it basically forced me to live below my means. And then what I was investing in, I wasn't so involved in the beginning, but I remember this basically pivotal point when I had enough money to stop investing everything in the stock market and was able to put money into real estate for the first time. I did it passively. And there was something about real estate that gave me, I don't know if I want to call it comfort or peace of mind, but it felt more real than the stock market.
Yeah.
And I invested in a storage portfolio. And I remember I got my first dividend. It was paid out quarterly. And I was like, dang, this is pretty cool. And then I got another one. And then I got another one. And I don't know what it was about cash flow from real estate, but that was like a big aha moment for me of like, oh my gosh, this is how I get out. If I just get more of this cash flow and I've got this appreciation and I get these, hits when there's a cash out refi, this is how I'm going to get out.
Yeah.
And so
Yeah.
I just really started enjoying real estate, but I was only doing it passively. What ended up basically happening is towards the tail end of my career, I started my first business in the craft beer industry. That has nothing to do with, real estate, but we didn't have enough money to start the company. We had to go out and build a business plan. We had to go raise money. And I kind of fell in love with that process, actually. I liked having to like pitch an idea. I liked having money come in and having to learn how to use it responsibly. And then we ended up selling the business and we paid all our investors astronomical amount of money, right?
Yeah. Wow.
And I just fell in love with the total process of entrepreneurship and having to figure out ways to get capital to create your dream, and then what it looked like to pay your investors back, and then what we got to take for succeeding in it as well.
Yeah.
And after we sold, we all stayed around for about a year, and then basically everybody left. And with the next business I started, I wanted to still build business because I enjoy the process of having an idea and, what you have to go through to try to bring that idea to reality. But I also liked raising money and I liked paying investors back. I think paying the investors back was the big one. And so I landed on a private equity real estate firm. I thought it'd be cool to build a business that, offered an investment to investors that I could maybe pay them back more frequently than the last business. And then I wanted there to be an educational process as well, because I believe part of my success was having somebody come in and actually teach me how the system worked. And so that's what we went out to build, a business that invested in real estate and also empowered our audience to either take our information and do what they want with it, or at least have a more educated experience when investing passively.
Yeah, and I think you touched on a number of things there I want to talk about, but I think for me, similar. I had a single family rental that was a house I lived in another state, and then kept it when I moved. And then it was something about the process of getting the direct deposit every month or seeing the cash flow. It's the weirdest thing. Like, I've talked to over 2,000 high net worth investors individually on calls that are interested in investing with us, and it's just like you get a doctor that's got a net worth of 5 million and they've only done stocks or whatever. Like, it doesn't become real until you actually start seeing the money. And there's something that actually happens. We call it the mailbox money show. It should be like the direct deposit show, but we advance, but the imagery is better, I think. But I think, yeah, there's something psychological. Once you see it, then it's like, oh, this actually works. And it's not just like in your head, it's like you feel it. And so as you see it and you can scale it up, it's very different than working for a paycheck. And we had, when I was in medical sales for 10 years, I worked with a couple doctors that made $3 million a year each. And yet they were working 80 hours a week. And so it wasn't something I wanted to emulate, right? But I thought, man, if these guys just figured out how to passively invest, and as Warren Buffett would say, learn how to make money while you sleep, right? It's very different than making money while you're awake. But it sounds like you discovered something as well, is that you really enjoy the business side. You enjoy the side of creating a business and working with investors and, of course, returning capital. So you've done this now with your brewing company, and then you've done it with Commune Capital. And can you talk a little bit more about kind of what kind of process maybe that you've watched investors go through, as maybe you've had some that have followed you for years and now they're investing with you. What's been kind of the journey that you've observed for people as they start getting involved in this passive investing experience?
Okay, we have about, maybe almost 600 investors. So I've seen it all at this point, right? I would say the coolest ones are the person who either got into real estate because they thought it was completely passive and just money showed up without them having to do something. And a lot of those people got into Airbnbs and realized how actually time consuming it can be.
Yeah.
And then after went, Mikey, I heard you talk about Airbnbs being, a pretty intense management kind of asset, or even how real estate as a whole still takes some time. I didn't believe you. It's true. I want to start investing passively, right? I want to focus on like what my true opportunity is, whether that's, a YouTube show, a business, they're an attorney, whatever.
Yeah.
So I think that's one cool one. I would say the second one is whenever you put money in investors' pockets, you touched on it. You all of a sudden have confidence that it's real because you're feeling it. But two, it is the coolest experience. Like to have an investor trust the operator, give them money, the operator being able to put money back in their pocket. That's what I think keeps me going. I love doing that. And so, yeah, those are probably the two best. I would say the worst, and something you need to be mindful of, is when you're getting started, you're so in need of capital that you're going to feel the desire to bring investors in that are actually not good fits.
Yeah.
And that experience actually sucks for both of you.
It sucks.
So just be mindful when you're getting started that the right capital is important, and it will do you a lot of good to say no to the wrong investors now versus having to navigate through that challenge 4 or 5 years down the road.
Yeah, I've experienced that. And yeah, just, it's just so important to have a good fit. In the beginning, you're just so excited that somebody's going to invest with you. And it's hard to get, I think it's hard to get going, but once you get going, people refer and they reinvest, hopefully, if you've had good results. But, you mentioned something as well. And I think it's kind of like the passive invest. There's some myths around passive investing, like what passive investing really is. Some people think, oh, if I own 5 rental houses, or if I own Airbnbs, that'll all be this passive income, or I have an internet business. And it's like, in reality, none of it's passive unless you're like giving a check to someone else or wiring funds and just receiving cash flow. Like and even that's mostly passive, right? Like it's work on the front end. But I think there's this idea that I'm just going to like buy a bunch of things and all of a sudden all this money is just going to show up. But there are things that are more passive, but I think there's a lot of myths around that. Can you talk a little bit more about kind of some of the myths that you've seen and how people kind of navigate that to actually get into things that are more passive?
Yeah. So there's certain businesses or investments that you can operate that maybe take more time than others. I think real estate is probably the closest thing to more passive style of business, in the sense of, if you can find the let's say an apartment, you're doing your underwriting, you get the financing, you bring the property manager on, right? You as an active investor, it's going to be front loaded on the work, right? But even once you get to the point where it's stabilized, you're still having to manage the management company, and there still will be time that you have to put into it. Now, is that as much as you self-managing the project? No, not at all. But that is very different than an investor coming in to, let's say, invest with me or you, and giving us a check and then us paying them a quarterly or a monthly return. That is passive. When you're a passive investor or an LP in a deal, that's passive. If you're doing it yourself, you can get it as close to passive as it can be, but it will still take time from you, just not as much as a job or, even something you're doing on the side.
Yeah. Yeah. I tell people too, sometimes the test is like, if you have 3 rental houses and, if you can't 10X your strategy, like if you couldn't instantly go to like 30 houses and not be like, oh my gosh, this is going to be so much work, even with a property manager, like there's still a lot of decisions that have to be made. They're asking you as a owner, what do I do here? The tenant, this issue here, these guys didn't pay. There's something needs to be fixed. Then, it's not passive. Talk to us a little bit about the type of deals that you're doing, because I know not all real estate deals are created equal. Talk to us just like, what kind of stuff are you working on? Are you you're doing development? What are some other things? Like, what are you working on?
Okay, so the 2 asset classes that we focus on are storage and multifamily.
Okay. Yeah.
Somewhat of a similar strategy, as in we want to find something distressed and we want to do a very heavy lift to add the value. On the storage side, we're buying big box retail that goes vacant. So your Walmarts, your Kmarts, your Bed Bath & Beyonds, and we do what's called an adaptive reuse. So we keep the existing structure, basically fill the inside with storage units. On the multifamily side, we're still looking for distressed, potentially vacant buildings. Like the last one we purchased was an abandoned car wash. And then we purchase it, we work with the city to get through entitlements, and then we develop it, and then we hold on to it. So somewhat of a heavy lift on both. The big difference is on storage, we are all over the country. On multifamily, we are only in California.
Okay. And California, let's talk about multifamily for a little bit, because I know multifamily in some areas, there's been a decrease in a lot of the valuation of some of these, especially the larger properties in some parts of the country, 20 to 40%. Are you seeing deals that cash flow, or are these more kind of heavy value add, or is it mostly development, or what are some of the stuff you're kind of working on?
Okay, so in the areas that we're looking at, cap rates have moved. We've seen them move about, I don't know, 3/4 of a point, which is that's a big haircut on projects. Um, our projects cash flowing. Okay, that's a complex question actually. In California, you're not buying assets for cash flow. You're
Right.
typically buying assets for a very small amount of cash flow and a lot of appreciation. Now, depending on your strategy right now, some things are working, some things are not. I would say if you're buying a stabilized project, you're buying it in cash right now. It's what a lot of the big investors are doing. They're waiting for the debt market to, potentially normalize, and then they're looking at backfilling it with debt. For your value add plays, so maybe somebody who does like a renovation, whether it's a light value add all the way to deep, I actually don't think there's enough return right now to justify that type of risk. For us, we think the only thing that really makes sense is development,
Right.
only because one, there's a lot of deals that are challenged right now, so you're actually able to get in at a good price. And then two, you're building it to what we call yield on cost, or maybe a better way to look at it is you're building it to a certain cap rate. So if the market right now, you could only buy a Class A multifamily apartment at let's say a 5 cap or 4.5 cap. Well, we're looking at yield on cost, let's say landing around 7%. That's like building something to a 7 cap. That gives us more room for
More
some of these
buffer.
projects to make sense.
Yeah. And in California, I know it can take, depending where you're building, it can take a little longer than other areas. But once you build, I mean, it's one of the benefits is it takes a little longer and you got to have some connections maybe to build. But how long does it take? I mean, and I guess, if you're buying in different, are you all over Southern California or kind of all over California?
We're really hyper focused on Ventura County,
Okay.
but we do have 2 in LA and 1 in San Diego. So we do have some diversity in the state.
Yeah. And have you found like how long, like if you buy an existing or vacant land or something, how long do you find the entitlements and to like actually break ground takes?
Okay. So
That's why I asked because
the
I live in LA and I know.
Yep. The last project that we closed on, the owner had been working on his entitlements for the last 7.5 years, right?
Oh,
So
wow.
it can take a long time. For us, typically what we see is from the point of us putting it under contract, it's usually going to take somewhere around, let's call it 2 years, two and change to get it entitled. Once it's entitled, we have probably another 12 months until we can break ground. And so it's a long process. Now, my outlook is this. It is so difficult to build here, and we've done such a poor job building over the last 15 years that we have put ourselves in the most extreme housing crisis the state has ever seen. And so you have, in my neighborhood, you'll have 18 people putting in an offer on one home, or
Yeah.
you'll have multiple applications coming in for one unit. And because that's the case, you continue to see rents and values of homes go up, even though the Fed has almost tripled interest rates
Yeah.
over the last 2 years. And that only happens when you're not able to add supply.
Yeah.
And so we believe that it's so difficult to do business here, and the state is so heavily regulated that one, it keeps out competition. And two, if you know how to build here, you're typically experiencing a scenario where you're leasing up your apartment so much faster than
Yeah.
all these other markets. And you see rent growth and appreciation continue to climb when you're looking at other markets and they're having to give concessions to fill their apartments up right now.
It's true. It is a different, we haven't bought in California. We've got our 2,000 units and mostly in Florida and Georgia and Alabama, I know down there, but to your point, it is. I mean, it's when you have areas that have things like rent control, they have a lot more restrictions on how you can build, what you can build. It actually kind of has an opposite effect that is desired. I mean, rent control, which we were really talking specifically about rent control, but it's trying to keep housing affordable. What it does is it creates less availability of housing, less people develop because of those reasons. But for those that do develop or do have property, I mean, it's an incredible way. There's a lot of reasons why people want to be in Southern California, right? There's a lot of like so many different countries. People want to park money here. There's all the, people know it's an appreciation market, but it gets to be, and I know people are saying this all around the country that real estate is just getting outrageous. Do you think that, okay, so let's play out some scenarios here. Do you think you fast forward 6 to 12 months or 2 years, do rates come down a bit and then valuations then go up? Or what do you think? I mean, if you, I know your crystal ball may be broken like mine, but if you were to play out some scenarios, how would you kind of play this going, Mikey?
A lot of crystal balls are broken right now. Uh, I think there's a lot of different scenarios that can happen. My expectation, I really don't think rates are going to move in a meaningful way for a few years. And even when they start to move, I don't think we're going to see 2021 numbers again. I think real estate probably ends up landing somewhere like it was in 2018, 2019. Um, so do interest rates eventually come down? I think they're going to. I mean, there's still a very large spread on your SOFR rate, and then what the interest rate that we're actually getting lands at. I think that can probably come down eventually, but this is probably what I think is going to happen on a macro level. It's too hard to tell. Real estate's too fragmented for that. I think the areas that are undersupplied and difficult to build, I'm not sure you're going to see a correction. I think you're going to see rates slowly come down. I think prices will continue to go up from here.
Yeah, I think so.
I think in the areas that are actually able to build, you will see more of a normal real estate correction happen, a healthy one. You're like Idaho. Idaho, to me, is ripe for a nasty correction, right?
Yeah,
I think
that was the fastest growing area in the country up there. Yeah, as far as
there's land available everywhere, and they're building like crazy, and it doesn't take long to build. Builders build, right? That's what we do. We build too much, and so I think you will see something there. But I don't know. The fundamentals still look very strong in multifamily. I'm not really expecting much to change, other than there's a lot of investors that are getting pinched right now. Like there are investors that were doing the same old strategy and starting deals in, let's say 19, 20, and 21 that were high leverage, and their expectation on where cap rates and interest rates were going to be when they were completing is just wildly off.
Yeah.
And so you're seeing a lot of operators basically struggle to try to get reinvestment. And it's coming through the lens of either pref equity or something buying the project. And so you have a lot of original investors getting wiped out. There's going to be pain on that side. But for everyone else, I think this is a buying opportunity.
But it's amazing too, the disparity between, especially some multifamily in certain markets, especially, and then also like single family. Single family has not come down since rates have risen, because people are locked into these 30, sometimes 40-year mortgages that are like sub 3%. So they can't sell. And I know multiple people that are like moving, but they like, oh, we're keeping the house because the asset now is the loan. It's no longer the real estate. It's like the loan on the real estate is so low, you can't sell it. And so I just wonder, at some point, I guess if rates come down a bit, maybe people start selling. But I mean, I know people have a 2.25%, 27 years left on or something. It's like, you can't sell that because you just know that you're so far below inflation. You just hold it, you're going to be in good shape. But now to go buy a new house, you're paying 8% or 7%. It's kind of a weird, they created this weird conundrum they don't really have a way out for, right?
No, the Fed has created millions of new real estate investors. There's no other way to look at it. So, what happens? I don't know. I think as the baby boomer generation starts passing down homes, maybe that has the potential to change things up a little bit. Look, if we hit a deep, deep recession, that could change things. Or I don't know, if we see behavior change in the youth and their desire to buy, that could change things as well. But
yeah,
I don't know. I'm not sure we're going to see anything here for a little bit, unfortunately.
Yeah. Yeah. Well, before we wrap up, I just want to ask you, I mean, you have a lot of great insights. I encourage everybody to check out your Instagram and your YouTube, and you've got lots of great resources out there, and even check out your deals you're doing. But what are some, we talked about some trends here, but what are some other trends that you're keeping an eye on, whether it's in real estate or in business or other things that you're like, here's some potential opportunity that I'm kind of keeping an eye on?
That's a good question. That's a good question. Well, I would say there's actually two parts to it. I'm constantly looking at technology that's improving or being created that we can plug into our businesses that make the experience for the investor better. That's one thing that real estate, it's one of the reasons why I started this business, because I felt like real estate was so behind the eight ball on where the actual level of technology was. It just felt old school.
Yeah.
And the investor experience is definitely not up to par to where it should be in 2024. So, I'm looking out for that. I would say, I think NFTs, and I actually think there's going to be like some part of the blockchain that's going to be able to be incorporated into our businesses that is going to be interesting, right? Like for the states that have title, that's only a matter of time. I think when you start selling off shares, I think blockchain is going to open up an opportunity for how we raise money and how investors are able to sell their investment in a totally different market.
Totally.
So I think that's interesting. Other things I'm looking at regulation that's changing with just accredited investor definition and how more people can have access to real estate, like, the Regulation A+ offering or CF. I think those are super cool. And so, look, I want us to get to a point. I'm going to try to sum this up very clearly or very quickly. I want everyone to get to the point where they can see a real estate investment, grab their phone, click it, double click, have it, scan their face, and then all of a sudden their investment's in. Like we will get to that point, and I'm excited for it.
Yeah, to that note, I was the MC at the Blockchain Real Estate Summit with my friend Michael Flight. So he's basically there's a whole movement around blockchain real estate and how do we do it. And then one of the big challenges is you can't really sell tokenized real estate. You can buy it, but you can't sell it for, I think, 1 year afterwards. And there's really no good exchanges. But eventually there's people really working on this hard to try to create it, change the laws. And I think you're right. Eventually it'll be like, and I think it's great, but there's also a real like threat of it as well. Cause like once you like have you look at REITs and you look at stocks and it's become financialized, right? So once everything is so like, Wall Street, whatever, it becomes so liquid, it can kind of take some of the like you and I, we buy amazing deals sometimes because there's this inefficiency, right? There's this illiquidity. There's this like totally like one house on the street could go for like half of what the other house does in the same condition, just because somebody got it in the right, shape and the right space. So obviously make things more efficient. I think there's some benefits there for sure, but it is very interesting. Well, Mikey, I feel like we could talk for a long time. We're going to have you back. We have these panels once a month. We have our friend Ken McElroy's on those sometimes. I'd love to have you back on one of those. How can people reach out? How can they find out about your deals and follow your social media and some of the programs that you offer?
Okay, so depending on your platform, just put in my name, Mikey Taylor. I'm been doing it long enough where I happen to go up to the top. So whatever platform you're on, just search my name and I should come up. And then if you want to just get information from me, shoot me a DM so we can connect. And then my company is Commune Capital. Our website is communecapital.com. If you're interested in seeing any of the deals we do, that would be great. And then if you want to just follow along and learn and see how we are doing real estate, we would love for you to be a part of that community as well.
Awesome, brother. Well, great to have you and really excited to have this episode go live and look forward to connecting with you more in the future. Thanks for being here, brother.
My man, thanks for having me.
All right. Awesome interview with Mikey Taylor. Again, follow him if you're not. What I got out of that is just continue to watch these trends, look at what's happening with tokenization. How can we make things more accessible to other people? And again, really looking at what is happening with debt. And the biggest thing is if you can make your debt work, you can get into deals where it makes sense, you can hold it. In the future, we know, especially in places like California, but all over the country, there's a shortage of a lot of people that, that we haven't built enough. We haven't built enough to really be able to grow and scale with the growing population. So, do I love multifamily? Absolutely. Have there been challenges in multifamily? Absolutely. But the future is very bright as long as you can manage it. That's where long-term fixed debt or having a situation where you can hold it for a long period of time is good. So if you haven't joined our investor club, I know I talk about it a fair amount because I'm so excited about it because we just are doing really unique deals inside real estate, outside of real estate, cash flowing deals with tax benefits and deals that have appreciation. You can go to bronsonequity.com, check that out. Look forward to seeing you on the next episode of the Mailbox Money Show. And thanks for taking the time to educate yourself. See you next time. You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.